Every time you have a big news event, the market is going to consolidate, and you'll have bigger consolidation patterns like what we're seeing right now. Am I sharing my screen? You see it?
Yeah.
You get your price cycles of 10, 11, this isn't big compared to what we have been trading. And so where we've seen 20 to 30, but what's happening is they're moving faster, right? So the price cycles are happening a lot faster because you got a lot more traders in the market right now. You got a lot more money in the market, just because, there's a lot of people that only trade news events. And this is one of the biggest news events of the month. So you get a lot of people on this news event. So you tend to get price cycles that happen a lot quicker, and you can pick up, some pre-news really quick, but what happens is what you're going to see is you'll see this, like what's happening. And as it closer gets 6:30, you'll see this.
Right.
And then you'll see either this, this, or this. And so when you see one of those things, make sure that you have your buys or sells on. Because if you see a breakout, what do we do, Andrew? You see the first candle. What do we do?
You panic buy.
No. If it goes up, if it shoots up, what do we do?
Do you sell on your way up?
Yes. But you don't sell on the way up. You sell
when it stalls.
When it hits the stall. Yeah.
Right. Exactly. And then you look for it to come back, and as soon as it stalls, you get out. But the only thing I'm worried about is the spread, right?
Okay.
So make sure that you're looking at your account info tab. Make sure that you're looking at getting this ready. Let me just double check my stats with Trader Agent, because make sure my stop losses are wide enough to withstand a shot. Oh, that's good.
Is there anything that you typically see during this event, Dave, or can it go either way?
Yeah, I'm just going to trade at 0, I guess. Good. Like a direction?
Yeah.
So this is where forecasting could come in and help a little bit, and also looking at what the reports are saying, like all that kind of stuff. Like reading, is it going to be a strong non-farm, weak non-farm, all that kind of stuff. And you can kind of somehow get what, a semblance of what you think is going to happen. But it doesn't, when you trade news, it's just like, well, I thought that was going to happen, but it didn't happen. And nobody's going to really know, if that makes sense. So you trade the action, not what you think is going to happen. Does that make sense?
Yeah.
You trade what is happening in front of you, not I know it's going to go up, so I'm going to place a ton of buys on. Do you know what I mean?
Yeah.
Yeah.
However,
what you're saying is everything you've told us so far goes out the window.
Yeah. When you're trading news events, you trade the action of the price, not, and it ignores action points. It ignores everything. Right. And so there's only a couple
bias. No.
Right. However, I do think that it'll probably, my opinion again is that it's going to try and reach for the dollar, for the elusive dollar. Now that doesn't mean it's going to, but I think that we've seen it try to touch it. We see it that it's tried to get up there this week, right? So this week it's tried to hit that dollar point right there, and it failed, and then it came all the way back down, And I think that if it's going to hit it again, non-farm is going to be a big catalyst in trying to get there. However, if it goes the opposite direction, we're not going to see the dollar for a little while. Does that make sense?
Yep.
Mm-hmm, mm-hmm.
So that's just an opinion. It has nothing to do with me forecasting or anything. That's just my thought. Is that you see this retracement right here. This is in preparation for the non-farm. And then all of this is, right here. So, all right, let's get trading.
So let me ask you, David.
Yeah.
You just said that be sure to be prepared with your buys and your sells. So what do you mean by that? So we have trades on it before it starts?
No. Okay, so there's a couple. Let's talk about that for a second. There's a couple different ways that you can trade. In fact, maybe we'll do that. No, I'm not going to do that. In Alveo, I'd probably do it. I just don't know what the spreads are going to be like, and I don't want to set trades up. So what I'm saying, if you're trading Alveo, you can put a pending buy and a pending sell. And one of those is going to hit, and in fact, you'll probably hit both of those, in my opinion. But I just don't know what the spreads are, and I don't want to hit this, enter the trade, and then all of a sudden have it whipsaw me back the other way and lose on that trade because it didn't cover the spread. So I'm not going to do that. But that is a way that you could trade an Alveo that I've done, or a pending buy and a pending sell order. But I'm not going to do that here. But the action that I'm talking about, just so everybody knows, is that as soon as you get that breakout candle, you take the opposite. As soon as it stalls, and you write it down until it stalls again, and you're cognizant of your spreads and make sure that you're actually making money. Then you close everything out, and then we'll sit and wait. And if it goes back the other way and crosses this point again, you could buy because it's going to run up. If it goes and gives you 100% retracement right here and continues the other way, you could sell right here because it's going to go the other way. But that's your trigger. Those are your action points in a news event. If it crosses the candle in the same direction, then it's going to run that way. If it 100% retraces and it goes back the other way, it's going to run the other way. So that's your action. These are your action points. Does that make sense?
All of that in a fraction of a second.
You could get this within 3 to 4 minutes. Yeah. So it moves really quick, really fast, really far. So that's what I'm saying. I'm not going to be telling you guys do this, and this. You got to get ready for it and do it yourself.
Okay. Well, this is the last time I'm using this account, other than
because it's going to be gone after today.
We'll see. So, might as well try some things, right?
Might as well try some things. All right, here we go. Let's go ahead and start the Weeble Wobbles.
Okay.
So I'm just going to go jump into a sell right here for the rundown into here.
Okay.
Right here is my take profit action point. 2 to 3 pips.
We're good. Sure. How do I turn off my stop losses?
You have to go back into your share agent template. And I just did that. So
I see.
Double click, load the 1 minute chart. And then you should see. So you go here, double click, load the 1 minute.
1 minute take profit. Oh, 1 minute zero take profit.
Yeah. And then I just took them off, my take profits and my stop losses off.
Stop loss with that. So just put it at 0.
That just for today.
Yeah.
Because you could get a first candle of 50, 60 pips and it could come back 100% in 1 minute, less than a minute.
And then would I Will I put a take profit on or no?
No. Don't limit yourself.
Don't limit myself.
Take all that profit, but make sure you get out with profit. Don't be like, it's going to give me more. All right, I'm going to close out my trades.
Gonna give you more.
Exactly. Oh, I didn't load my trader agent. So
Than you ever bargained for.
So now I'm going to jump back into buys. Right here, just off the Weeble Wobble. I've canceled my trader agent, so it went to their back.
That just messed up my view, Dave.
You messed up your view?
Yeah, I can't.
Did you load 1 minute?
Oh, you know what? I know what it is. Never mind.
Okay.
I loaded my
5 minutes.
I loaded my 5 minute take zero profit, not my 1 minute. That's what I did. There it is.
I like that, Ed. Ed says non-farm has a 67 a negative surprise factor. That is huge. Like both ESP and whipsawing, it works 100% of the time. Robin says, how long before a news event you stop trading, just waiting for the announcement? Probably about 5 minutes prior. As soon as you start seeing the price cycles shrink, like it could be happening right now, like the candles shrink, you'll see that.
Will you
That's
close your?
Go ahead.
Yeah, will you close your positions just before the announcement if you haven't had a chance to do it before?
Yes, I would, because they could turn into bigger losses than you're ready for. So I'd rather look for a break-even situation. But there's a lot of good trading, like we've already seen, like right in here. You could have already gotten we could have already hit our goal of 1% right before just trading pre-news, right? And then you get some of that post-news action too. So sometimes people just jump in and trade pre-news because the spreads are good and you can pick up a lot of profit along the journey. This is just perfect for wobbling right here.
I started about 15 minutes before and did that, and I may hit my 1% already on my second demo account.
Yeah, but today's not about hitting 1%. Today's about trading non-farm. But if I was trading my live account, I probably would do just that, like just trade the pre-news stuff and then sit on my hands during the news event, right?
But congratulations on hitting your 1%. Whenever I get to my 1%, I know I should quit and I'm happy for the day. If I stay 15 minutes more, then I lose half of that and then I feel shitty for the day or trade for 7 more hours.
Yeah, that's exactly what's happened to me.
Do you give yourself, the NX says, do you give yourself a buffer when setting pinning? Yeah. Not 10 pips. I just do here's consolidation over on the 5 minute chart. I would probably put a pinning buy right above it. So I'd put it above this right here. And then a pinning sell, I'd put it right there. So not a huge buffer, but if it breaks up, that means if it goes there, it means it's definitely chosen to go up. But sometimes you get the worst it's going to do is that right there, or goes up. And so if you have pinning buys, it gets you in and then goes immediately the other way. And then it goes back the other way and gets you in both of your pinning buys and you lose on both of them really bad. because you hit your stop losses. Yeah, I've had that happen to me in trading news events this way. I don't trade with stop losses.
So will the spread change during that dramatically or not?
Oh yeah, that's why I'm trading this account, because I'm not familiar with what the spread's going to do. I imagine that you'll see it go from 1 to maybe 5 to 7.
Wow.
I've never done that before, so that's why I'm kind of curious to see what we're going to do here.
So fade the first candle and wait to see where it goes.
Mm-hmm. I got to tell everybody, I had a proud papa moment yesterday. So around the 3 o'clock time, you can't trade, three when the banks close at 5 p.m. Eastern time, you can't trade. So I decided to go take a little bit of a break and to go down to kind of a field next to my house. It's like within walking distance, and go just throw some frisbees, because I've been getting into frisbee golf lately and just practice. And I call my son to see if he wants to join me. And he's like, I can't, I have trades on.
Right.
That's the first time I've ever heard those words come out of his mouth.
That's
great.
And I'm like, awesome. That's awesome. But why do you have trades on at 3 o'clock?
I can tell you why. You put him on at 7 a.m. and you're still staring at him.
That wasn't the case. He's like, oh, what happens at 3 o'clock? Like he's brand new. But hey, he his first day, it was his first day trading, like him legit trying to learn how to do it. And he made like 1.5%. And so he's got hooked. He made like $70 on a $5,000 account. So hey, not bad for a first day, right?
Wow.
Get addicted.
You should have called me, Dave. I would have come thrown some discs.
Yeah. No, I was just like literally within walking distance. I was only going to do it for like an hour. Yeah. So, all right. So here is when I'm looking to just get out of my trades right about now.
Yeah.
Things are getting up. So.
Yeah, we're getting closer and closer, and I don't want to be into any of my trades. So I'm just gonna, as soon as I hit like a break even,
I think it's gonna shoot down.
And then, how long is this event?
Not very long. Like
Not
within 10 minutes for sure, it'll be done.
Gotcha.
If it breaks above that, I'm just going to close out everything.
Prepare for the ride.
And it goes silent.
Why is it? It's really quiet now,
Yeah.
In here in about 1 to 2 minutes, you'll start seeing your spreads go crazy. So that's why
No.
I'm seeing if it'll give me just one more candle to get out, but that's okay.
Are you hoping and praying, Dave?
Little hope. I would say a pray comes in when you're at a point where you just don't. A prayer comes in when you're at a point where you don't want to take the loss. A hope says, I'd rather take a break even than a $20 loss. So that fulfilled my hope. I have a strategy.
There
Not
you
quite a prey yet.
And the trigger. I think it's going up first, then it's going to sweep down.
All right. Here in about 1 minute, you'll start seeing the spreads jump. Anybody doing pending orders? Just curious.
You know.
Nope.
Big old nope. Nada.
I don't know how to do pending orders. Maybe you can go over that later.
And here's our spreads. See our spreads? They're
Yeah,
starting to move like crazy.
Mhm, mhm.
It's just going up and down. Like your spreads are.
Oof.
I know it will go up first.
This is all in anticipation of the event. See. And the spreads are just continuing to climb. Get your finger on your trigger. Doesn't mean that this candle is not indicative of the news event. Doesn't mean now our spreads are going.
Crazy.
You'll know when non-farm hits. It'll be there.
That's
You go.
what I expected. That's
Yeah.
what I
Wait till this stall, and then we're gonna buy.
expected.
We're gonna buy. Oh, our spreads aren't too bad actually. Okay, I'm gonna go ahead and start putting some buys on
That's what I expected.
and put some more buys on. I'm just building more buying.
I guess it doesn't
positions.
matter. Just throw on.
Wow, what? I'm really spreads are not bad. Man.
Dave, I can go as heavy as I want, right? Because
No, trade it like a normal account
okay.
because it's just fake money. No, you practice how you play, man.
Right,
Come on, coach.
Fine. Fine. I just holy cow.
Yeah, we're gonna get follow through. I don't like that stall right there. Man, those spreads are not bad. I thought we were gonna see more spreads.
So
I don't like
think
the follow through of that sell means that we're gonna get another candle to the bottom. So goodbye
Yes.
parity basically is what's happening. It's not gonna try and get to that dollar. Unless it just shoots back the other way. So that could be like initial reaction. And now this is the calm down. And I'm gonna, whoops.
yeah, but I mean,
I just closed out all of that. Let me change this microphone up. I just closed out all of that for just like $100 profit. One of the things that you could have done, and was going to do, is you could increase your position size here because they're fast profits, but you win big, lose big. So on YouTube, guarantee you on YouTube, I've seen this so many times, like people will drop like $5,000 on one trade and they'll just get one trade. And that's all they do. It's really risky and it's really stupid, but I see people do that a lot. And because they're like, I could double my money really quick, right?
right.
All right. So now the action of this news event has happened. Doesn't mean it's done. It means it's right here. It means, okay, now we know what the news is. We know what the news is. Now, how are we going to react to it? And when you see stuff like this where it doesn't retrace back, it means that probably going to follow. It's going to follow through with a continuation. So if you're into buys, it would be a good chance. I'm going to flip into sells personally if it pulls back up a little bit, unless I see just a large candle that crosses kind of that 50% line in my head. But I'm going to flip into some sells for a take profit of the top of testing the top of that candle. But if it comes back then you could see a full retracement of that candle. So my take profit is going to be if it pulls back and tests the bottom again, and I'll see if it breaks through that bottom.
Oh, going back up.
All right. Come on. So it's like indecisive right now as to what it's going to do. Is it going to continue the down, or is it going to break that and try to retrace this 100%? For me, I'm just going to close out everything. The thing that is interesting to me is I would have thought we would have had bigger spreads. And these spreads are awesome in my mind compared to what I thought we would have saw. So that's news for me, from particularly because on all other news events that I've traded LMFX in, it's like 5 to 6 on the spreads. And so it's interesting to me that the major news event of the month, they don't increase your spreads like that high. So, I mean, I like that. That's awesome. But yeah, that's a positive observation. I don't know. It's just like, I don't know, Robin, just like yesterday or the other day when we traded was it the CCI or the end? I don't know. I don't remember what it was. It did hit like 5 to 6, and that was just this week. And we lost money taking out because we lost money because of the spread, right? Not trading day. All right, so here is a little bit of if it breaks down lower, it could shoot lower. It could get another bigger candle. And so I'd hesitate to get into buys right here, because it could shoot down another candle, like another big candle. Wonder what this initial move was. So that initial move was to the body. It's 37 pips. The fade was 17.
So just about the 50% you've always talked about.
All right, so here it is breaking. So I'll probably jump into a sell and ride this breakout, see where it goes. And if it retraces back to here, I'll close out with a loss. So it's just kind of if it does break, I'll capitalize on it. If it doesn't, I'll go ahead and get out. So it's kind of a test trade, if you will. And I'm going to definitely, I will get out with a loss if it hits there or shoots back the other way. I'm not going to ride that thinking, oh, it's going to come back. You don't ever do that in the news event. You just take the loss, take the loss. Okay. Still hasn't crossed this right here, so it still could say we're going to do it or not. But normally I've seen that where if it breaks that, you get another bigger candle. I'll wait till the body closes. May just sell into that. So we could start seeing some consolidation as well. And that'll help me lessen that position right there. So I'm going to go ahead and take that loss, like I said. Unless that crosses the body, but if it stalls, I will definitely close out of everything. Like I said, unless it closes lower, so I'll wait 30 seconds. Ooh, there's my stall. I should have took it. Should take it. And then it'll shoot out. That's how it is. As soon as you hit close all, then it does what you think it was going to
do. Right. I mean, I'm sure it's wired like that. Yeah.
Yes, it trades against me. Right. Just me.
Right.
Some days I feel like that. I had a day this week where like I got in I thought I was going to trade for a little while. And the first three moves, it did the opposite of what I thought it was going to do. And so I'm just like, okay, I'm done trading. And I'll do that a lot. Like if it's just weird to me and I'm just not in sync. I'm not in tune with the market. It's just doing things. I'll just stop trading and come back. And whether it's a loss for that session, it doesn't happen that often, but it did to me this week where everything I was doing, it was doing the opposite of what I thought it was going to do. So I'm just like, I'm done trading right now. I'll come back in a couple hours or tomorrow or whatever, right? Instead of trying to fight through the market that you're just not in sync with. So I'm just like, I'll take that loss and just be done. That's through many, many years of sitting through that and fighting through that. Cause I'm like, I'm trading right now and I'm going to trade. And
I know the feeling
of having that. And then I'm sitting there for more hours just trying to recover. I'd rather just take the loss and come back another day when I'm in sync with the market. Oh. My wife and her sister they own a professional organizing company, and they decided that my basement needed to get organized. And now I got like sleeping bags and camping gear all over my desk and I can't move. All right. So now the news events, it's definitely over. So now we're trading post news. And even though these are still 8 to 10 pips price cycles, this is when we're going to start going back into wobbling, right? But you have to also be cognizant of this line, this red line, which is still the fib levels off of this. So we'll fib level this back to see if we get 100% retracement. The other thing you also have to be cognizant of is the same rules apply. You need to, if you're trading heavy with larger take profits, larger stop losses, you need to go back to your normal trading allotment, normal trading rules, all that kind of stuff. You need to go back to your price cycles, your action points, your fib levels. So these are, just drawing out in my mind. And this is kind of like your fib level events right here that we're going to be looking at. So I'm going to draw to see how close I actually am to being correct. Because once you do it enough, you don't necessarily need to draw the fib retracements, but we're going to draw. See how close I am. All right. So I was pretty close. So right here, I did the opposite way. I do that sometimes. Drew it the wrong way.
Mm-hmm.
Hey, hello. I want you to go away. I didn't. I need to do that thing that Josh showed me yesterday, where I can actually grab the objects on the chart. All right. So is it? Yeah, right here to here. So it's pretty close with my lines right there off of a fib retracement. So this is the line we'll look for. This is the line we'll look for, and then this line right here. So in my mind, I've done it so much that I just kind of know where those points are, right? And I'd probably say that this one is more true than this one, just because you have a little bit of action right there. So if it crosses above this, going to go to here, going to go here, going to go here. And if it finally crosses above that, you should see 100% retracement. Like that organization needs prior chaos to happen. Exactly. Any questions? Josh, I looked at it. It took a long time to get out of the 9-to-5 mindset, which was killing me for sure. Okay, so we got a little bit of a breakdown. So now that we got a little bit of a breakdown, that does change the fib levels if this candle holds and keeps running. But like I said before, you still want to be cognizant of the breakdown, so you want to trade light right there. But I am probably going to fade that on the stall. We'll see if it gets continuation. I'm not going to go super heavy, but I will put a layer on right there. And if it pops down a little bit more, see if one, because I think so. If it comes back to here and tests the top of that, sometimes you get a pullback on that gets you quick profits. If it same kind of rule though, like with the news event, same time of rule that if it fails to cross that 50% on this next candle, then it opens the door for a continuation of that down candle. And so if it comes up and stalls right there, you should get out. And I don't like that the action is slower to retreat than it was to go down, right? So that means that it's trying to, but you still got a lot of pressure coming in that says, no, I need to go down. So you see how that's working right there. So I don't know if it's going to reach that. So I'm probably just going to peel that off right there and live to fight another day. Somebody made the comment in Discord. I'm going to look that up, but I thought was a really, really good comment of what Sean typically says. So, and that's kind of, I don't say that. And it reminded me that Sean does say that, but I teach that. I don't break it up. And so I'm like, I don't say that as a 1, 2, 3, but it's very important because that's exactly what I teach, but I don't usually break it up. So your goal, your first goal is to break even on your trade. Your second goal is to make a little, and your third goal is to make a lot, right? And that's exactly how I teach the trade. You start out getting in light, then you get in heavier, and you can add more to your position. So you start light so that breaking even is easy. And then as you add to your position, you can get heavier to make a little, and then you make a little, and then you make a lot, right? And so I love that. First goal, break even on my trade. Second goal, make a little. Third goal, make a lot. There's something that I haven't yet showed you guys, but I've added a different technique just recently in the market conditions that we're in. So we're seeing market conditions that are running 20 to 30 price cycles. And I started thinking, you see how it failed to really push back higher? That's why I got out of that fade, because the candle, it was harder to go up than it is to go down. And so that, to me, was my intuitiveness, because I'm an intuitive, methodical trader. My intuitiveness is saying, okay, it's not doing that. It has nothing to do with any indicators or anything like that. It's just my intuitiveness saying, okay, I'm feeling like it's not going to do it, so I get out, right? And my alarm's going on. Time to get up to trade. So yeah. Fed levels. So now we got to look and see where is our next bounce point. So I'm going to pull that to a 15-minute chart and see if we can see where our next bounce point is. And we're coming right into that. Oops. What is going on? I didn't. Yeah, I got into a buy limit order. Anyways, you want to know how to get a buy limit order? Hit the right mouse button, hit the left one really quick. That's what I did. So this is a pending buy, and it says buy limit. It's a pending buy. Patricia, you had that question earlier today. Also, you can come down here to trading, which is right below, and you could put the buy limit on, or you could put a sell order on. So meaning that if the market comes down to this price, I'm going to sell. If the market comes down to this price, I'll enter into a buy, right? And so those are what we call pending buys, pending sells.
Okay.
And I was trying to just clean up my chart here real fast so I can actually see where that is. And we're right on it. So we're right on that bounce point. So I'm probably going to add a buy right there. And I'm not going to go in with a full layer because we still haven't yet said we're stopping. But I always like to kind of put a test layer right on a bounce point or when it comes through. Now, it is not it. Like I said earlier that it could, if it's going to hit that dollar point, non-farm's going to push it higher. But if it doesn't, we're not going to see that dollar for a while. And again, you should never forecast the market, but it helps me because sometimes we like to still do that in our minds, like, oh, it's going to go up, and it's going to, because it went all the way down, it's got to go up. And so our bias tends to be more forecasty, but it helps me to eliminate that forecast bias by, well, non-farm just pushed it down and went all the way down to here. And so now you really should only be trading in the moment, not looking for any sort of forecast, like it's going to go up to $1 or whatever, right? And so that just helps me to be like, okay, what's it going to do in the next hour? So this is the reason why I kind of like putting test trades on bounce points, is because even if it's not going to bounce and break through, you usually get some stronger stronger price action going against the other way. If it fails to break that, it could come back and have a continuation and ignore that price point. But you tend to usually get at least a reversal point of a candle. And so like that, it didn't do that. So I'm just going to go ahead and pull out of my trades right there. But if it's on a major reverse point, you tend to at least get a candle or two pushing it higher before you get a continuation of a breakthrough of that major support line, if that makes sense. Just checking in. Dad, how are you doing this morning?
Real good. I mean, I'm 1.5%. I've just been following what you do. That's all. Nothing special.
Andrew, you're muted, but if I was leading lips, you're like, Dave, I love trading. I love you, but I'm you're the best teacher ever. That's what you're saying, right?
Yeah. No, I started out good. I started out okay, and then I got into some trades as it was
dropping down,
and then it they went against me. So started out with $60 and then ended up down 47. So it was all right, whatever. We'll figure this out one day eventually.
It's still not bad. You could have been a lot worse on these moves.
No, I mean, I feel like I traded. I feel like I did it smart. I was like, no, this isn't going on. So I got out quickly, but it moved so quick that it was still losing $10 on each trade. So
right. Like, in my opinion, when you're trading news events, you need to get to the point where, and that's why I said don't do it if you're not used to trading news events. I've traded a lot of news events, so I'm at that point. So if you're going to trade a news event, you need to get to the point where you're not still trying to think about every move. It's more reactionary, right? And until you're there, I would always trade news events and for a practice.
Yeah.
So as you can see, the action, I mean, is just really quick. Pre-news, we had good action. Now we're post-news action, and so this would be a great place to recover off $40 loss or whatever, right? Is that what you're looking at? 40 or 70?
47.
Oh, 47. Tercio, how you doing? How you holding on?
I'm down like $70.
Okay.
So again, I was just slow to hit the mouse and stuff like that, reacting. I was trying really to pay more attention to what you're saying and doing on your screen. But yeah, I mean, now I understand what you're talking about. But yeah, I'm down. I'm sure we'll recover that $70.
Yeah, right here, even though this feels small, it's not small, right? Because you got this candle that's making these candles look smaller, but that's still, I mean, this is a great wobble, 9 to 10 pips and 2 to 3 candles, right? And so we should be wobbling this stuff. Oops, that is not what I wanted to do. It's a noob thing, noob alert. Still getting used to where my buys and sells are on here. I bought when I should have sold. So you can definitely make up. I mean, this is prime trading for wobbling. That stupid. Let's just grab the stop loss and deal with this. This is prime wobbling situation right here. So if you want to make a quick, you want to recover, this is the best time to do that, right? All right. So now if you're looking at just a small little fib retracement off of this move right here, if it crosses above this right here, it's probably going to run up to the top. That doesn't mean it's going to run up to the top in one candle. It could, but if it breaks above this, look for it to start running to the top. So what that means to me is I've got sells on right here. So if it comes down and gets me to a break-even situation or a little bit of a profit, I'll change my bias as it to this point, right? Still looking, if it comes back into that point, I'd still look to, now I just changed my retracement of my fib level retracement from, I'd move it all the way back down to here and see if we are in fact going to get 100% retracement. All right, I'm going to do that. So let's see, tools, options, charts, or was it objects? Gosh, which one was that again? I don't remember. Where was that?
Good morning.
It's objects and then what?
Class trading.
These two boxes right here.
We catch up later. Yeah. Thanks.
And then the last one. Thanks. I don't know. I'm just not thinking right here. All right. Still can't click it. All right, so it did that. So now it's at the top of that. So I'm gonna fade. I'm just gonna say fading. I'm gonna sell into that right here, seeing if it's gonna have a hard time breaking that. But what I'm also doing on this particular layer right here is I'm gonna probably double up on this layer because these layers are now needing to break even or take a little bit of a loss on it. Because I don't think it's gonna come down and give me profit on those layers because it missed the bounce point. And the other thing that I did wrong that I always tell you guys to look for, and I failed to see it, is guess what? It came up, tested and tested again. This was on the second test. So the likelihood of breaking on the second test was greater because, but I didn't see that, but now I see it. So I should have waited and seen if it was going to break through instead of putting that layer on. But that's okay. So this layer now fixes this layer. And if it breaks above that, then I have to do the same thing, but I'm trading extremely light right now so that I can fix that stuff. So we'll wait and see if this candle if this candle does hold above that in 10 seconds, we're also into what I would consider a 1, 2, 3 price cycle. So the chances of it giving me a price cycle down is greater than it breaking this and running all the way up. However, you still have a lot of traders in the market, and it doesn't mean that we're fully away from the effects of the news event. And so if it starts to ignore price cycles, price points, and just ignores behavior, personally, I'd say I'm done trading, and because I'll wait till it comes back to a normal kind of environment because I've already got enough profit on the books to say I'm done trading. But I'm going to try and break even and protect my profit here. So go ahead and sell that. So if it does turn into like a fourth price cycle, then I'll get out of my positions. All right, so on these guys, it pulls back down. It's having a hard time pulling back down. I'm going to peel off these losses down here. So I'm out of that trade. Now I'm looking to recover on those trades.
So do you think with that candle coming down
and stalling,
would you like be biased towards buying?
That's exactly what I'm doing right now. That's a good thought. You're looking for that 50% retracement on the 5-minute from the bottom. So that's what I was trying to draw with my objects, is that same thing. but I can't do that. And then of course it does that, which is fine. Okay, so this is what I was going to draw from this point to that point. I did it again. Okay, so this is the fib level. You see how it broke that, came up to here. If it just kind of breaks, you don't draw it with a pencil. Always draw it with a marker, right? So this line, this would be a solid break of that fib level if it crossed above that, right? But go ahead, oops, missed the opportunity. I was going to buy down here, but I had my zoom controls on, not my mouse. I'm going to buy all the way down to here. And if it crosses there, then I'll fix those buys. But in my mind, I'm buying. Again, this is not necessarily where my bias flips. Oops, I got to turn that off.
Pretty good spreads right now.
It is good. In my mind, right here, this line says that if it crosses that, we're going to get 2 price cycles down. And then I got to trade light because where price cycles are still really good, 10 greater than 10 pips. So I'm not, if it crosses that line, I'm not saying I'm going to close out for a loss on those trades. But what I am saying is that I'm going to look to, now I'm going to start looking to break even on that layer if it crosses that line. But if it doesn't, I'm going to continue to buy in to the position that might be on our fib, playing the fibs. Anybody killing it today? Anybody just like knock it out of the park? Just curious.
Me, 250 pips.
250 pips? Awesome.
250, yeah.
Pete says plus
It's 130.
$30 or pips? Okay, great. That's awesome. I know in Alveo, we always talk in terms of pips, but in LMFX, we talk in terms of dollars. So Robin plus 68%. Yeah, that's why that's the real thing. It's like dollars and pips percent is still king, right? How are you doing on your percentage, right? So that's awesome. Anybody in fixing in fix it mode, trying to fix their trades, right? Like
Me? Just trying to fix. Well, I wouldn't say fix, just trying to
get above the profit line.
Yeah.
But you know what? Sometimes off of a news event, breaking even is a win. All right, I'm gonna kind of fade this candle just because it crossed over early into that candle, meaning that whenever it crosses over early on a candle, there's a good probability for it to not hold on that. Pull it to ray trace. and it didn't retrace very much. So that tells me, because it didn't retrace very much, that tells me that we're going to probably get that break, because it didn't say, I don't want anything to do with that. In order for me to fix these layers right here, I need it to break above that, or I need to look at selling on this down price cycle, which I'm probably going to do. So this is another technique that if it does cross with the body, I'll get into some sells to ride the price cycle down, get back, take profit on the sells down, ride the price cycle back up. If it does do that, I'll take profit on the buys. And then as it comes down, I'll use the sell money and the buy money to just close out of those trades. So that's, in my mind, I have a predetermined action that I'm going to take if the market crosses this line. If it doesn't, all that means is that we're back into a price cycle back up. And if it comes up and does in fact cross that red line or this blue candle, then it goes back to like what we talked about, what Sean says: first goal, break even; second goal, make a little; third goal, make a lot. So I'm still on my first goal of breaking even. All right, so this has to hold right there. But because it's doing that, it's going to give me an opportunity to get out of some of those. Oh, I want to get out of you. I'm just going to peel off some of my worst losses right there. Because if it comes back the other way, I don't want those losses to double on me.
So you're still thinking it's going to go down?
No, I am thinking that I'm wobbling. I don't care what it does right now.
Yeah, no, I mean, why do you take your losses before waiting for it to go all the way up?
Why did I take it? Because it was struggling to carry the down wick here, down wick there. And so I could have easily seen it come back, and it's only a one candle break. I like this candle to get confirmation. And I didn't, I would have rather taken that loss than run the risk of it saying we're going to come all the way back down. Does that make sense?
That makes sense.
So it's all about, for me, it's about, I deal in my head, I deal in terms of probabilities. What's the highest probability that on a one candle shot up and it breaks above that's going to have a follow through, or it's going to pull back at least 50% of that one candle. And normally I see a pullback where you don't usually see one candle break a action point, right? Where we haven't seen that previously, where you one candle back the other way. So now, if it holds above this, I took out that worst loss, and you could have said, well, you could have held on to it, but I didn't know if it was going to continue to go down and test the bottom. That's why I got out. And I never say that again. I never say on my losses or my profits. I never say I could have, should have. I've learned to eliminate that out of my mindset a long time ago. And now it's what's done is done, and look for the next opportunity. Does that make sense?
That's a great mentality. I mean, honestly, that's awesome.
Yeah, because it's no. So I'm going to go ahead and close those just because we got that stall, right? So I'm looking for wobble. Now we definitely have broken that on the fib level, this level. So it's a definite hard break. It's coming up to test this. So you could see some consolidation. You could see some consolidation right in here. Or it could just as easily break this 50% line right there, and then get consolidation up into here. But again, we're still playing that fib level off of this news event. A lot of times you will see it come up and get that 100% retracement. That doesn't mean it's going to come up and give you that 100% retracement in 10 minutes, 20 minutes, 30 minutes. But playing the fib level, a lot of times you do see 100% retracement off of that news, because the news takes the market and puts it into an uncomfortable situation. Once the news is gone, then all the banks and everything try really hard to get it back to where they had it before the news events. And so that's why you see that happen quite a bit.
So I'm only down $7 now instead of
awesome
$37.
It's awesome. So I made back the money that I lost, because I think I was somewhere in the $400 range, and then I took a $200 loss and made that back or something like that. But that's awesome, though. It's really good. It's not about having big wins. It's about having many wins.
So I'm up $280 now.
Awesome.
Good.
So one thing that, Dad, I want to point out, and first of all, I was telling Patricio, because I talked to him, he had a couple of questions for me after that call. And I was really, really worried. And after that I was beating you up too bad on our trading session yesterday. So first of all, I apologize if I was.
Well, I didn't feel it. I'm fine.
Okay, good. But second of all, thank you so much for allowing me to get that on recording, because I have seen so many traders do the same thing that you did yesterday, but nobody ever wants to share that. Nobody ever wants to share that with people. And so I've never, ever, ever, ever been able to catch somebody doing that in a recorded session, if that makes sense. I've always seen the aftermath of what they've done, but I've never seen it when they're doing it. Does that make sense? And so it's a huge, huge, huge learning tool for me to catch somebody that is in the middle of doing what you just did. Instead of talking about it, we were in it. And so that was huge, right?
Yeah.
And so I know that your initial reaction was, no, go to somebody else. I don't want to share my wounds. And that's a natural reaction for every single trader out there, because I throw this out to the Wobble crew, the people in the Wobble crew all the time. It's like, record your trading session, send it to me. But very few people actually do. And when I do get them, it's always, look, I made 1%. I'm like, that's awesome. But what am I supposed to do? Say, just pat you on the back and say, great job trading. Well, you're not here in my class because you're the best trader. You're here in my class because you have weaknesses but you're not exposing me to your weaknesses. Does that make sense? So expose me to your weaknesses and we can fix them. But if you only show me the good days of trading, what am I supposed to do with that information? Right.
Yeah.
And so I really, really, first of all, I was just like, I hope that, I didn't feel like I was picking on you. Right. I like that. Pete says, my weakness is that I'm too good of a trader. My weakness is that I'm a really cocky trader. But I'm the most humble person. So the point that I was trying to say is that one of the things that I would like you and everybody else to get from what we just did today versus what we did yesterday was I'm taking losses. I'm taking losses in my account, right? So I think that's situated correctly. So I took a $7 loss, $7 loss, $7 loss, $10, $13, $23, $28 loss, $30 loss, $6 loss, all in today's session. There's another $21 loss, $5 loss, I am taking losses. There's $4. Is that today? Yes, today. So in this session, I am taking losses. And I'm taking losses. I'm taking, where most traders, like my worst loss in one trade was like a $30 loss. Most traders who have a $30 loss will be like, I'm not taking a $30 loss, right? That's a big loss. I'm not going to take that. I'm going to hold on to that and see if it'll come back and give me a better position. Yeah, no, I know that, Josh. Thanks. Yeah, and I'll probably do that and do wrap up here, and I think we're probably close to wrapping up. But the point is that instead of saying I'm going to wait for this trade to come back, what you're really saying as new trader mindset, and that this isn't, when I say you, I'm not talking to you, Dad. I'm talking to generalities, like people who are trading. What traders do is they say, I'm in a loss and it's $30. I'm going to wait for that loss to come back. And now I'm at a $20 loss. This is good. This market's actually now going in my direction that I want it to go. So I'm going to wait a little more to see if it can go from 20 to 10. And what happens is it comes down. The pullback gives you that $20 loss. And then in our mind, we start saying, I'm going to see if I can recover. And the worst thing the market can do is recover all the way to and get you out with either a break even, or the worst thing it could do is give you profit. Is give you profit on that. Why is that the worst thing the market could do for you as a trader?
It gives you confidence.
Bad habits.
It teaches you a bad habit.
Yeah.
Teaches you a bad habit, right? So the question was down here from Patricio, Dave, why did you take that $18 loss instead of wait to see if the market was going to do this? Well, I took that $18 loss because it gave me the opportunity to take the loss, because it came back, touched this with one candle. Typically, I don't see, in my trading experience, I don't see a one candle break that action point as typically where you get one candle to break the action point. That's not a solid break. Usually you see the one candle break and then it comes back the other way. This is what usually I call an exhaustion bar, where you get a one candle that breaks an action point and then that's not a strong enough candle and it comes back the other way. So the market gave me the opportunity to get out of that loss, and I took it, right? Because that is the best thing to do with that trade, right? Sitting on it and saying, it's coming back in my direction. And then that $18 turns back into a $30 loss. Well, if going back to this example right here, it comes back, and what we do as traders is it comes back and now it's a $20 loss, and we don't take it because we think, hey, it came back and now it's $20. I know I was right anyway, so I know it's going to come back and hit that. And what happens is now that $20 loss, that $30 turns into 20. What happens is now we sit and we hold, and now it's back to a $30 loss, and we're like, well, that sucks. And then we tell ourselves, well, if it comes back now, next time I'm going to take it, right? We've all been there. If it comes back next time, I'm going to take it. And then guess what? Sometimes it does come back, but then we trick ourselves into thinking, now for sure it's going to come back up, so I'm not going to take it, right? Or exactly what Joe just said, it doesn't come back, and that $30 loss turns into a $60 loss. So the point that I'm trying to make is that until you can start hitting that X button and taking those losses with just as easy as you can hit that X button to take those profits, you will not be a consistent trader. If you are still stressed about taking losses and it's painful to take losses, you will not be a consistent trader. Taking losses is part of the game. Taking losses makes you more money, makes you a consistent trader. You never let your losers run, but you always look for the opportunity, the best opportunity to, what was that? Break even, right? First rule, first trade, we trade to break even. Second, we make a little. Third, we make a lot. And I love that somebody put that in Discord. I've actually never heard Sean say that's it, but that's exactly what I teach every single day. And it just is a great summary. So I'm going to steal that and incorporate that into my own teaching and whatever. Does that make sense? Any questions on that from anybody in the group?
No, that makes perfect sense.
Yeah, I agree because that's what has hit me a lot. I'm expecting it's going to make 2 cycles back, and I lost hundreds of pips like that.
And
so
every trading session, no, you're going to take a loss, but every trading session get better that it's you taking the loss, not the market forcing you to take the loss. Does that make sense? That makes sense. There's a difference. If I'm taking the loss, whether it's an $18, $20, $30 loss, if I'm taking that loss, I have the power, right? And I use that this week, and I'm loving that statement of taking the power back from the market. And yesterday in that trading session with you, Dad, you had no power. You were powerless against the market, right? You had given all of your power to the market. And that to me was a really good example of we don't want to be in those positions. And in order to eliminate us to being in those positions, we need to know when we're taking the losses and take those losses and be easy to take those losses, right? It's never easy to take a loss. I hesitate to say that because it is kind of easy for me to take a loss, because I've gotten to the point where if I don't take the loss, it's going to double on me, right? And I'd rather take the loss at 30 than at 60. And so if I'm taking a $30 loss, that means that I'm seeing the market going against me the opposite direction. I can see that $30 loss turning into 60. So I'm like, nope, I'm done. That's out. I'm getting out. And I'm happy to take the loss because I'm like, I got to take this loss before it turns into a bigger loss. Instead of the mindset of a trader saying, I don't want to take this loss because I think the market's going to come back. The other thing that I teach a lot is that, yeah, guess what? If the market does come back, I would rather take that loss here than and now flip it into a sell. That same trade I can put back onto a sell, and then I can make money here, and then that I can get out in that same trade. I can make money here on that same trade. I can make money here on that same trade. And if I was in a buy right here on that, and I took the loss here, and I'm making money on that same trade, and then it comes back and I say, yep, you know what? I was right. It came back. But because I took that loss, I was able to take the same trade, make money here, and then hold on to it and make a lot of money here on the same exact trade. But if I do not take that trade at quantity, that position off, then I had just made 1x my money. Here, I close out and I'm probably making, I take the loss there, recover the loss here, make money on that trade, again, make money on that trade again. And so that's the way I look at it, is like that trade is not making me any money. That position is not making me any money. And that's why it's important to know on wobbling the layers. That layer is not making me any money. So I need to get out of that layer, reposition it, put that layer here. So now it's making me money. And I think as a trader's mindset, you think, oh, the market's down to here. Like I'm not going to take that trade off. I'm going to wait. The market's down to here. Now it's here. I'm not making any money, but it's recovering on my losses. I would rather flip the script, get out of your loss here. And now it's making you money because you have the power, right? You are now in control of these where you're not in control of it here. I don't know if that makes any sense, but those are kind of the evolution of trading and the mindset of trading.
I think the thing I learned is I'd rather take a loss than give it power over me all day long. That was terrible.
Mm-hmm. And so everybody has to go through that at least once or twice. Everybody here, if they didn't have Alveo to cut them off at 5%, would have had catastrophic days where they would have lost a lot more than 5%. Right?
Yeah, absolutely.
Right. And so if you were trading Alveo, you wouldn't have been in that situation. Hence the reason why Sean has that 5% rule, right? I'm just gonna go back to any questions, any comments before we kind of close the session for today. I'm done trading. I don't know about anybody else. You guys can continue to trade this, but it's struggling to cross that 50% mark. So if you were going to continue to trade today, I would still play the fib levels. If it comes up here and crosses here, it means it's going to come to here. If it crosses here, you could make a lot of money between this point and this point, because it could just run up really quick, right? And I don't think it's going to do that for a minute, because it's going to probably consolidate. But if it does get up to there and you do happen to see that, I would be buying all the way up there, right? So
yeah, I'm closing out here too.
You got some Fed speaking. Okay. I'm just gonna go look and see what we have questions, and we'll wrap up. Speaking of today, I'm gonna ask the questions. So I'll be thinking about it after I get through the comments. I'm gonna ask the question on some takeaways for today's trading session. So you guys could think about that. I'll ask that in a second, but I'm going to go through the comments and questions to make sure I'm not missing anything. The other thing too, really quick. Pete, you hit me up on Discord saying you asked a question about wobble trade allocation. You sent it to me in an email. And my question to you is, when people send me a question in an email, do you want that to be a private response, or can I respond to that right here and make it a public response? The thing is, like, I'm cognizant if it's usually an email, people are like, I don't want everybody to know what I did wrong or something like that. But I often like to make them public, because if you're having a question, a lot of other people are having a question. So I'd rather answer that question to the group than to the individual, right? Okay. So I'm going to answer your question, but I don't think it's relative to right this second or this trading session. So before I answer your question, I would like to do it live in front of a group. But did anybody have any questions about what we just traded through? I'm just going through the comments to see if there's any questions we didn't talk about. So if you do, go ahead and throw them on. Any questions on the session or anything like that? I don't think there is. Okay. Give me 2 seconds. My dog needs to go outside. I gotta let him out with that. Okay. Okay. Sorry about that. Okay, so Pete's question is, He says he's been thinking about his trading and how to capitalize and fully understand. And when I review my trading habits and my review my mistakes, something occurred to me that he wanted to ask me a question on to see if he's correct. The basics: $10,000 account, two total lots to trade with. One lot for trading. I want to make sure referencing this is for Alveo, not for LMFX, but one lot for trading, one lot for fixed mode. Yep, correct. 50 positions total, but they're really 40 total at 0.05 equals 2 lots. So 20 trades for normal trading, 20 trades for fixed mode. Non-fixed mode trading is within 3 price cycles, long or short. Okay. So does that mean if the market has gone 3 price cycles away, should I be at a 20 trade limit at that point? Explain that 20 trade limit. Like your stop losses are at 20. Is that what you mean by that? What's a 20 trade limit in your mind? Oh, at 20 trades on. Like you should only have 20 trades on. Sorry. My brain's still getting fogginess out because I'm usually, time and time again, I keep finding myself too heavy after the first and second price cycles, already using 20 trades because I keep seeing 2 pips of profit between. Great question. And I think a lot of times people are into this and the third price cycle is happening. I think this is a great question for the group because I see this a lot, particularly with Cool. I've been teaching him the same thing and he's finally starting to get it. And it's been like awesome to see him starting to get these huge, he had the same issue. And if I understand the issue correctly, let me just draw here. You're saying that if I stack in a layer, and I'm just going to draw, this is a layer. So we'll just say layer, the market, we'll just say that these are cells. The market goes against you. And so you stack in another layer here, cell layer, and it goes against you again, and you stack in another cell layer, right? And so now you're, even if it does come back, you're still heavy down here. Is that right? And so now, you don't. So the key thing here, is that you're 20 trades in. So, but 20 trades is still 20 trades equals 50% of your position. So the other 50% is used in allocation to fix these layers to get them to break even. Right? So particularly, so if you get into a marching market or you get to that, right? Particularly in these conditions that we've seen just in the past week or so, where we've had 20 to 30 price cycles, that's the key. So first of all, the key is to understand what your price cycles are. If your price cycles are greater than 10, cut your layers in half. So if your price cycles are greater than 10, your layers are no longer 4 trades, they're 2 trades per layer, right? So that's the first thing that we have to do. Because where you're saying 4 price cycles away, I don't see the market typically doing that. However, on the third price cycle, so when you get to a third price cycle, so first of all, the first layer that I do is usually a test layer, and it's usually a light layer. Just the first one's usually always a light layer, and it's usually 2 or half of my position, unless it's like, I mean, there's always exceptions to every rule, and we could sit here all day, unless, right? But typically, my first layer, like if I was going to jump in right this second and take the bounce, right here, I would get in on a half of a layer because it could bounce, yes. And I would think the probability of the bouncing is greater than doing another price cycle down, but it could also price cycle down another layer. So I would get into a half a layer, or, if that makes sense. So my first layer is generally light. My second layer, if it goes against me, I could take those other two and put those. And so now it could be like a 6 layer, right? Because if it goes back, I'd want to get out of that layer. So the key to here is don't let it go 3 price cycles away before seeing an opportunity to get out of this layer. So I often say I never let it go 3 price cycles away. I need to have my stop losses at 3 price cycles away, just in case. My stop losses are always just in case the market does this. But when I'm trading, I never want it go more than 3 price cycles away, but I rarely ever let it go 3 price cycles away. Meaning that if it's into the 3rd price cycle and it comes back, then that's where I would get out of this layer, right? I don't say it's going to go 1, 2, 3 price cycles, and then on the 4th price cycle, I look to get out of that layer. So I'm generally out of this layer way before it breaks to the 3rd price cycle. So and because if it does, then it's going to hit my stop losses. And so I'm always looking for opportunities to get out of that layer. Right. And so even though I say I never let it go more than 3 price cycles against me, I don't, as like a hard and fast rule, but generally I'm usually out of that layer, or I've doubled up on this layer to fix this layer. Right. And so I'm constantly using my allocation, the other 50%, in adjusting or fixing my trades, right? I think, so this is great. This is great that you're asking the question. It's great that I'm responding to this. So I also think that this question needs to be answered in a more structured environment, where I can spend probably like an hour on it. So what I'll do is next Thursday night in the Wallbow crew, I'll answer this question on the other 50%. How do we allocate the other 50%? Because I think that's your problem, is that you're not dipping into that other percent until you've identified that my trades have gone bad. And sometimes you need to dip into that other 50% to keep them from going bad. So that's kind of where I'll leave you with, is that sometimes we need to give ourselves more trading positions on opportunities, high value or high probability opportunities. We need to dip into that to fix that, right? And I love that Ed, Joe has all the math on this. And for those of you guys who are analytical traders, which I am not, math is going to be huge for you guys. So I'd love to see that math, and I'd love to incorporate that in the conversation, because I don't do math in my trades, but because I'm not an analytical trader. But those of you guys who approach the market through an analytical mindset are going to love to have that math, right? For me, it's about methodical and predetermined actions, because I need that for me, for my trading style. I need a if this then that, an ABC, a predetermined action that I've already determined. That is my methodical approach, right? So, and then like I use my intuitive. So if you're intuitive, methodical, you trade like I do. But if you're analytical or aggressive, you're going to see the market completely different. So I'd love to see the math. If you have that, if you can send that to me. I think Joseph, you may have sent that to me, but maybe with a video description. So record a video on how you use it in your trading. And then I can throw that out for the analytical traders, because sometimes I don't do a very good job of explaining from the mindset of aggressive or analytical because I'm not. So I don't. So if you could help me, that would be great, because one thing I did learn over the boot camp, and this was just coincidence or understanding, is that I asked the question to all the traders in there, who was analytical, and probably over 80% of the traders in there were analytical. Coincidence? I don't know. But that caused me to think, okay, you guys view the market from a completely different mindset. Hold on, I gotta get my dog. There's deer in my backyard, and so hold on.
Everyone, have a good day, everyone.
Hey, thanks a lot. Take care.
Good.
Sorry about that. My dog and deer don't get along very well.
We could fix that.
Need to. So he'll chase the deer, and sometimes the deer will chase him. And the deer in my neighborhood are not afraid of dogs. And he's gotten to a fight with a buck before that I've seen. He's almost gotten the wrong end of the buck. And so whenever there's deer out there, I'm like, you're coming in. Okay. So yeah, if you guys could do that, I would love to kind of maybe approach it from an analytical mindset and then break it up that way. Because I know maybe Patricio, have you taken that investor profile?
Yes, I did. Yes, okay. I did.
What are you?
Analytical, like you said?
You are analytical. Yeah. That's good. Andrew, let's get you to take that so we can kind of understand what you're at.
Okay. Can you send
Dad,
it to me?
Do you remember yours, Dad?
Yeah, I'm analytical.
Yeah. Wow. Okay. So I'm teaching you guys all wrong.
Okay, now you tell us.
Now I tell it.
My ability to analyze tells me I need to copy you no matter what.
So let's do that next Thursday in my class. I'll go over this, like how to trade with the other 50%, and I'll dig, and I'll teach myself how to teach analytical traders, because I found that we have a lot of analyticals. I'm pretty sure Joseph is analytical for sure. He's analytical. Ed, are you aggressive, mythological, or methodical? Because I'm a mythological trader for sure. That's when you get into that hope and pray strategy. All right, guys. Last thing I want to ask is like a recap of the day. What did you learn? What are some of your takeaways from today's trading session? Patricio, go. Let me hear what that is.
Yeah. Okay. So if, really quick, David, just talking about the analytical you were saying. Did you saw the graph that Nick sent on the Discord?
The what?
The graph that Nick sent on the Discord.
Oh, gotcha. That was last night, and I'll be honest with you, my sleep caught up to me, and I fell asleep at 5:00 last night, and woke up at like 11. I'm like, oh crap, I got to post there. And so I barely saw it, but I didn't. And then I fell right back asleep. So I didn't really see the graph, but I saw him post it. And then, okay. So what about the graph? I have it up now. I'm looking at it.
No, I mean, just talking about analytical, that could be something else that we can get into as far as having tools for analytical person. Mm-hmm. If you go over that later, see if it's right. I think it helps. That thing you said about next Thursday, I love it. The explanation you just gave is great. And my main takeaway is, again, this thing about really being able to take losses. I think it's fundamental. It's something we definitely need to practice for sure, and still keep working on the lot placement and lot usage and all of that, which you're going to address next Thursday. So I mean, that's my main takeaway. And other than that, I wouldn't trade the news maybe for a few months till I get better at everything else, because these things move fast on you.
It does. It moves fast, right? And so you need to be able to be in that position where you can just read and react really quickly, right? So just react to the market conditions. guys, if you have any takeaways, please post them too. I'd love to have them. So Robin says, don't wait till the fourth cycle before taking a loss on the first layer. Good. That's a great takeaway. Andrew, what's your takeaways for today's session?
That I actually traded this quite well.
That's not a takeaway. That's a pat on your back.
No,
look how good I am.
No.
I'm just kidding.
Yes, but no, I mean, like I actually recognized, okay, I'm in a tough spot. This is going to get away from me. I need to get out now.
Okay.
Before I lose more than I'm comfortable with.
Sure.
And then I got to a point where I was like, okay, I'm just going to sit. I'm going to wait for my next opportunity. And then I ended up bringing my losses back. Then I ended up almost breaking even on the day.
Right.
So it shows me that, my biggest takeaway is that, if I'd done this a week ago, then I would be in a lot worse position than what I am now because of the lessons that I've learned throughout this week. So,
sure.
When I took those losses initially, I was like, my confidence was, well, crap, what am I doing here? Like, what am I actually learning from this? And then I'm like, you know what? Actually, I can see exactly what I've learned because, my mentality last week would have been to hold on to these trades and I'd be in a lot worse position than I am now. So I am learning things, maybe not as quickly as I want to, but I feel like I'm definitely becoming better at this than I think I am. So,
yeah, I'm a little jealous. I'm not going to lie. I think there's probably a lot of people that might be jealous of your trade, of your education path. Like, I truly wish that I had, when I first started trading, I didn't have every single day somebody that I could ask questions to, somebody that I could trade with every single day, right? And even though I had Sean, I could watch him trade. I wasn't able to sit and he never asked me, like, what'd you think? What do you, he was just like, okay, I'm done trading. You figure it out, right? Like, he didn't say you figure it out, but he didn't sit down and have a Q&A with me like I'm doing with you. So right. I'm hoping that'll expedite your learning curve so much more than what I had, right? Pops, what's your takeaway? So I'm jealous, and I don't know. I'm also, I don't think you understand the value either. So hopefully other traders who have been doing it for a while can be jealous with me. Go ahead, Dad. What's your takeaway?
Well, one takeaway I have is that I learned that about an hour before non-farm payroll is a good time to trade a live account. Another takeaway is I hadn't traded the news in a long time, but I found that if I wait for it to come down and start its bounce, it's a good time to get in. And so I made a little money on that.
Good.
So it's kind of a refresher for me as far as trading the news. I'm not really excited about doing the news, but it's interesting.
No, you can make a lot of money quickly, right?
Yeah.
Let's see. Josh says how to watch the news candle and decide which position to get into and how quick to get out during news. Yeah, no, that was good because we did get out quickly. Speaking of that, can you guys see this chart? I'm not sure if I'm sharing my screen or if I just shared my chart. Do you guys see this? This no. Kind of like, what do you guys see?
The
trading chart.
You see the trading chart, the LMFX?
Yeah.
Okay. I need to stop sharing quick. And I'm just going to go do a quick overview of. All right. Now you guys should see this account information, right?
Mm-hmm.
Okay. Yeah. So the point that the point that I'm trying to, you guys can't read it. I'm going to make it bigger. Is that better?
Yeah.
Okay. So the point that I'm trying to make is that that the trading session for today, we traded, probably about just an hour of legit trading, from like 6:30 to 7:30, right? So we traded for an hour. I had placed total trades, 60 trades, 134. No, those are short positions one. So I'm still getting used to reading this. So how many trades did I win on? I don't care about consecutive wins. But the point that I'm trying to make, I don't know if it tells me that. One's lost on total trades. So I guess I could add it up. 34 and 64, I won 20. And so I won. I don't know. That sucks. Doesn't tell me. Anyways, dollar amount. I made $651, but I lost 188. Those losses that are me taking the losses, right? The market didn't tell me I needed to. The market didn't force me into taking those losses. I took those losses before they got bigger on me, right? So at a $463 profit, I am extremely happy with the $463 profit for an hour's worth of work, right?
Right.
Nothing wrong with that. So in my account today, in that account, I ended the day at 14,328.37 or a 3.34% return in an hour's worth of work. But the point that I'm trying to make is that I never would have gotten there if I would have let those guys run. If those guys would have ran, it could have eaten up all of my profit and I could have ended the day with a loss. Does that make sense? So sometimes as a trader, we're like, any loss is unacceptable. But the point that I'm trying to make here is that if you learn to incorporate losses in your daily trading, you'll make more money and be more consistent, and learn to take the loss instead of them holding on to those losses. Because I often talk about recycling your trades, the same thing. Get out of that loss so that you can have it back and don't let the market have power over you. But anyways, so hopefully that helps and makes sense. Let's go real quick. Let's wrap this up. Patricio, what did you end the day on?
5274.30.
5274.30 for a big winner. You beat me. You made 4.3% gain. So good job.
Yeah, well, that was after the news. The news didn't help, believe me.
No. That's awesome. 4.3% gain in an hour. Pops, what'd you do?
Well, I did part of it in my other demo account and part in the new demo, the demo account that I'm going to use next week. So I made $44 in the one I'm going to use next week, and then I made $150 in the other one.
Okay, so 150 from the 10,000. So you're 10,150.
Yeah. Well, no, I'm on the 10,000. I'm 1040 now.
Okay.
But I didn't want to trade this account on the news because I had no idea what it's.
Got it. Okay, Andrew.
Ended up at 43.06 and 28 cents.
And 28 cents.
Yeah.
So you're down $7.
$7.60. Yep.
$7.60. All right. Anybody else have a greater than 4% return today? Just curious. That was awesome, Patricio. Good trading.
Thank you.
Pete says, what's a good relationship between recycling your trades and trying to max out your profits with a zero take profit? It is just candle stalling. I mean, it is as simple as that. There's other variables that go into play, but it's stalling at the action points. That's it, right? Yeah. So if it breaks through and doesn't stall at the action point, it's not a recycle trade. It's a hold on. And there was something I was going to talk to you guys about, but I think that what the direction that the conversation lent itself was much better than what I was going to talk about. But remind me, because I think in order for you guys, the first thing is learning how to fix your trades or not getting into a situation where you're in a catastrophic loss or failure point. But remind me, I wanted to share with you guys kind of a different technique that I've been incorporating. I had an aha moment this week in my trading session, and I wanted to share that with you, but it's about how to maximize profits through a different technique that I've been doing. And I've been able to just to kind of like really maximize profit gains, particularly when you're in a run, when you're when you catch the right side of a marching market or 20, 30 pip price cycles. So remind me to talk to you guys about that. And I'll explain that because I think it's a technique that you can really like. The other night, I made like almost $7,000 in like 3 hours. And that's when it dawned on me that this technique I need to do it. And since then I've been trying to recreate that, and I have been, but not at that level because I was just caught in a big run. But I've been able to double, if not triple, what I would normally do as far as taking profits. So remind me on that. It's a technique that I'd like to share with you guys. Anyways, I like that. It's a good title for a YouTube video. Thank you. And those of you guys who haven't liked and subscribed to YouTube, please do. I've just helped me out a ton because I'm trying to get that built up. So appreciate the reminder on that. Nothing. Have a good weekend. I'm going to use this weekend as a great time to not trade, take a break from trading. So we'll see you guys again Monday morning, and we'll get after it. On Monday, we are officially going to start launching the 5 to 50K challenge and tracking the journal every single day, how long it actually takes us to get to 50K. So look forward to that, and look forward to another major announcement that I'm going to announce Monday as well, that I'm excited for you guys to participate in. So that being said, that's a good call. I did not know it was Columbus Day. The market is open.
It's an international market, doesn't recognize United States holiday.
Yeah, but the banks are closed, so we could see nothing on Monday. And if we don't see anything on Monday, we could just turn it into a teaching day. So let's just plan on and I'll still plan on having the session, and we could just turn it into just my strategy teaching moment if you see nothing in the market. But typically I don't like trading holidays, bank holidays. Banks are closed. It sucks. Yep. 7 Mountain Time. So with that, guys, thank you very much. And we will see you Monday.
Thank you, David.
Thanks, Dave.